Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. I hope you all had a good weekend. If you celebrate Easter, Passover, or whatnot, I hope you enjoyed your holiday, your time with your family and your loved ones. In today's episode, we got some very interesting topics to talk about. First, before we get into them, I want to talk about the big news that I think came out today that I just don't see a lot of people really getting excited about it. But to me, this is a very big deal. It looks like Tesla China Giga Shanghai is set to open. It was supposed to open today, and there are some rumors that it actually did open today and there's workers there, but it looks like tomorrow's the official open day. So keep an eye out for that. The big thing about this is that this should mean we're not going to be closed for all of April. This should mean that we only had about 18, call it 19 days without production. Keep in mind, Q1, we had about 14 days without production. So now it looks like we can potentially make up what was lost. It doesn't mean we're going to have a crazy quarter as we would have expected if none of this happened, but it does mean that we stand a chance to still have a record quarter. Even if it's by 1,000 vehicles, I will take it. Not only will Giga Shanghai be ramping up more and be able to have a higher run rate, but we'll also have Austin and Berlin delivering. Again, I don't have a lot of expectations for Austin, but I think Berlin is supposed to be stepping up. There's even a rumor out, article where somebody was doing essentially a factory check, and it appeared that Giga Berlin was at about 350 vehicle run rate, and that they aim to be at 1,000 vehicles per week by the end of the month. So very exciting news. This is just getting started. Luckily, Shanghai is going to get back to work, and that's great for all of us. It's great for investors, and that's great just for the world in general. All right, so that covers the China piece. All right, I know a lot of you are probably just waiting to get into the $10 trillion, the 10x of Tesla part of the thumbnail and the title, but we'll get there in 1 second. There's one other thing we need to cover. Take a look at this. So if you turn on CNBC, Bloomberg, Yahoo, CNN Money, Fox Business, if you turn on any business news today, you should have seen something regarding this about Rivian. So let me just read this tweet real quick. Rivian CEO says electric vehicle business faces a looming battery shortage. All the world's sales production combined represent well under 10% of what we will need in 10 years, meaning 90% to 95% of the supply chain does not exist. So Rivian stock took a beating for this, but who's been saying this? Who's been saying this during earnings calls? As early as, I think, 2019, maybe even 2018, not 2019, Elon has been saying on quarterly earnings calls to all the battery producers, build as many batteries as you can. We will buy them all. So it makes you wonder, how long-term contracts does Tesla have? And this puts Tesla in a very strong position. Not to mention, we got the 46 to 80 batteries ramping up. Elon said that he predicts that Austin will become the biggest battery plant in the world. So this is a very true statement. Elon's been warning about this. He's been knocking on the door about this. And meanwhile, Rivian, a startup, is at least acknowledging the facts of this. We don't see this from GM. We don't see this from Ford. We don't see this really from Volkswagen. None of these other automakers are really acknowledging the fact that all of these aspirational goals and things that they have is nothing but marketing BS. And the reality is they do not have the batteries to do this. They don't have the supply chain to do this. They don't have, honestly, the plans to do this. You're right. I don't know what their plans are. However, there are only a certain amount of battery manufacturers out there. There's only a certain amount of mines. There's only a certain amount of supply for nickel and lithium, manganese. I mean, these things are out there, right? It's not like I'm the only one saying this. So the question is, where is this going to come from for all of them? At the very least, you got to give Rivian credit for coming out and saying the truth and acknowledging what's actually happening here. There is a bottleneck when it comes to batteries. And according to the CEO of Rivian, which again is exactly what Elon said during the last earnings call, the battery shortage we're going to have next year, next 2, 3, 4, 5 years, will be worse than what we saw with the chip shortage right now in the last 2 years. Right? So keep an eye out for that. And shout out to the CEO of Rivian for saying this and being honest about it rather than promising the world to everybody just to get a tick up in your stock. Right? I think this is very admirable. All right. Let's talk about what you probably clicked on today's episode for and what you want to know what I'm talking about this new report that came out. Worm Capital came out with a whole 91-page, I believe, deck about their estimation of what's going to happen with Tesla moving forward, the decade of Tesla, and why everybody else is so far behind. 91 pages. Now, it doesn't actually take that long to get through it. I'm not going to sit here and go through all of it with you. I just don't have the time to do that today. However, I did pick out some very interesting slides in this, and there are so many interesting slides, so it's kind of hard just to stick to a few. As I was sitting there, like, saving certain slides, I realized, oh man, this is starting to grow. I might as well just do the whole PowerPoint, but I didn't. So I have a few key ones I want to talk about. I will leave a link to the whole deck for you to go through. Again, it'll probably take you maybe 12 minutes to go through it. It's not very wordy. It's minimal words, lots of graphs. So it's something that's going to be very digestible and easy to get through. I highly recommend you do it, especially if you're an investor in Tesla, especially if you're a long-term investor, and especially even more so than any of them, any investors or long-term investors. If you doubt or have any disbelief that Tesla's going where they're going to go, look at this. Look at it objectively and see what you think. All right, let's start off with the first slide that I found interesting. So this says our forecast for Tesla in the 2020s. Ludicrous growth mode we anticipate. 50% revenue CAGR, compound annual growth rate. More than any company of its size and scale in history. They go on to say the potential to achieve a 20 million vehicle production run rate by the year end of 2030, so call it 2031. 40% gross margins at scale. We believe Tesla shares could offer a 10x return by 2030 and potentially much more. So 10x return by 2030. That's right now we're at 1,000, so this would mean 10,000. I go back to the constant scenario or analogy I use. If you had 1,000 shares of Tesla right now, that's the equivalent of $1 million, you would have 10 million. All right. If you had 100 shares of Tesla right now, that's 100,000, you would have $1 million. So you get the idea. 10x, right? Whatever you have, 10x it. That's what they're saying in 2030. This is amazing. But there is an asterisk. Take a look at this. Notice the asterisk on the bottom right or on the top right where it says much more. Well, if you look right below that, we see what the asterisk meant. So they write, note, our 10x by 2030 valuation assumptions include Tesla's current business lines. This figure does not include Tesla's planned robotaxi network or real-world AI product revenue, each of which have profound upside implications to our financial models. This is what I've been saying. For any of you who have gone on Patreon, which, by the way, you can find my link down below. If you go on Patreon, you sign up, you can. There's a viewable or downloadable version of my model just for 2022 right now. I'm about to put up for my next, for 2030, right, all out. But essentially, this just proves what I've been saying. This is at least a confirmation of my thoughts from someone else who you would think is a reputable source. Again, I don't know much about Worm Capital. I still want to look them up and just make sure that they are someone that has a good track record. But from what I've seen, if you go through the PowerPoint, they actually highlight all the way back to I think like 2015, 2016, all the different articles, all the different calls they made. I mean, they called Tesla pre-split to $1,000 when it was at $69. So they do seem to have a track record when it comes to Tesla. And I've talked about this a lot. When it comes to investing, you don't need to trust anybody or anyone who is right all the time. But when somebody's right consistently over and over about a certain company, a certain product, a certain, thesis thing, like that's the person you want to listen to about that. And so people who have been successful and called Tesla correct over and over, I want to listen to them. I don't want to listen to the Gordon Johnsons who have been wrong for the last decade and as a result have missed out on this incredible run. All right, so listen to the people who are getting things right. All right, so anyways, this is massive, all right? So this is easily a 10x. This confirms what I'm thinking. This confirms what essentially Kathy Woods is thinking. So this is great, and this is without robotaxis. This is without the humanoid, without any of that. So this is amazing. All right, next slide I found very interesting. EV adoption represents the largest industrial paradigm shift of the 21st century. In 2021, electric car sales more than doubled to 6.6 million, representing close to 9% of the global car market and more than tripling their market share from 2 years earlier. All the net growth in global car sales in 2021 came from electric cars. Just that line. All the net growth in global car sales in 2021 came from electric cars. That's not a coincidence. This is a trend. Look at the chart here. you can see this is the beginning of an exponential curve. All right, next chart that I thought was interesting. Okay, here we go. This is regarding GM. GM's failed push into EVs is a sign of what's yet to come. So notice this. This is GM's production volume. If you look at the bottom, right, where we can see what's what, you see on the left, you can see that the dark green is total wholesale vehicle sales. On the right, it's EVs produced. EVs produced went from 23,297 to 2021, where they're at 22,081. So they have been going down essentially in their sales when it comes to EVs. Not only have they been going down in sales with their EVs, but look at the total wholesale vehicle sales here. That's a very clear down and to the right. It's the exact opposite we want, right? So they're declining just on every single metric when it comes to sales. Not a good thing. Again, reaffirming the same thing we've been saying about where we think GM, Ford, Volkswagen, all these companies are either going to be shells of who they were, they're going to merge, or they're just going to go bankrupt. I really believe in this. This was another one that I found very interesting. And me and my best friend, Greg Proctor, the intellectual property attorney, I had an interview with not too long ago. If you haven't seen it, you can find it right here. But him and I were talking yesterday, and we were talking about Tesla and their team and how they build their factories out. And so it was just coincidental that this was in this deck here, but it says Tesla doesn't contract out factory construction. Tesla has an in-house construction unit building out its factories. This enables a radically new and optimized manufacturing process. Historical analogy. Amazon built its own distribution centers to reinvent e-commerce logistics. I think Tesla's doing the same thing. What I was talking to Greg about yesterday was, I think Shanghai was the template. It was the first attempt. And then you had Giga Berlin and Giga Austin. This was more so the proof of concept. Can we do this at scale? Okay, next, I think they're going to do 4 factories. So don't quote me on this, just me. I don't have any reason to believe this is true, but it just seems like it makes logical sense, especially if they want to go extreme scale. I can see them saying, okay, we're going to go build 4 factories now. Another thing we talk about a lot is Tesla's differentiation from everyone else. So take a look at this slide. In-house machine software speeds up response times. Tesla developed its own OS operating system to manage nearly all its manufacturing robots with custom software. So we all know this, right? Tesla has a incredible software team. They do a lot of stuff. It's how they're able to rewrite firmware for all these other microcontrollers, essentially, all these processors. But this goes on to say, changes can be made to its operating system much faster than other OEMs can draft a proposal to send to a third-party vendor. In other words, because everything's in-house, because they have the software engineers there, they can go ahead, make changes on the fly, implement, and move forward. The other OEMs essentially have to fill out a change order form on what they want the software to do and what's not working and how they want it done, and then it has to go send it off to someone else who has to take that, interpret it, think they know what they're asking for, send it back, see if it works. If it doesn't, they have to go back, iterate back and forth. That doesn't happen at Tesla. At Tesla, they're there. It's fast, streamlined. This is such a big differentiator that nobody sees, and this is the stuff that doesn't make it onto the P&L sheet. However, it kind of does, because that's when we start seeing the gross margins that nobody else can seem to come up with. This next slide was one that really shocked me. Like, we all know Tesla has a massive lead when it comes to superchargers, right? I mean, it's obvious. Like, I mean, you see them out there. You just don't see a lot of other vendors. However, when you see it on a graph, it really contextualizes the difference. And so, I guess if you were to ask me, I never looked it up, right? If you were to ask me, do I think that there's anyone else who can catch up to Tesla on the superchargers? I probably would have said one individual, no, but as a cohort, all other superchargers, yeah, probably. Well, apparently I would have been wrong. Look at this chart. If you aggregate FCN, ChargePoint, EVgo, Electrify America, if you aggregate all of them, they are maybe half of what Tesla has for the US fast charging ports. Maybe. And you know Tesla's going faster. You know Tesla's making more revenue on every single supercharger. You know they're more efficient with it. So here comes the real question. Let's say, hypothetically, Tesla decides to go ahead and fully open up all of their chargers, which is not really much of a hypothetical. They're already testing this out in Europe. So they open up all the superchargers. And Tesla continues to just spin out superchargers all across the world, all across the country. At what point do all these other companies essentially just go by the wayside, because how can they compete? Tesla does it cheaper, more efficient, faster, better product. People aren't going to choose to go to the other ones. Everyone's going to choose to go to a Tesla supercharging station. Like, think about that. And then in a few years down the road, once essentially the competition is just gone, well, then what happens? Well, then maybe Tesla starts charging a little more for these. Or maybe what they're getting is enough to really start being even more meaningful, because the energy that they're capturing with solar panels and mega packs just becomes so cost effective that we start to see more of a meaningful revenue from the superchargers. I mean, like this could have very profound impacts, but the main thing I took away from this was just the sheer lead Tesla has with superchargers. Like, I knew they were leading. I didn't realize it was this massive. This is something else that never makes it onto the P&L sheet. Okay, again, this is why you can't invest just on P&L, and why I said in yesterday's video and other videos, when we invest, at least investing against the grain, our method, we invest not just in companies, but in people, right? We invest in the Steve Jobs, in the Jeff Bezos, in the Elon Musk of the world. Why? Well, because not only are we investing in them and their talent, but their talent attracts other talent. So look at this. Engineering students rank Tesla as one of the most desirable U.S. companies to work for. So if you see all the top engineering students' desires for companies they want to work for listed here, 1 through 8. Number 1, Tesla. Number 2, SpaceX. Oh, guess who owns both? Elon Musk. Guess who we're investing in? Elon Musk. Guess what else? SpaceX, Tesla, so many synergies. They do so much cross-pollination within their work. This is a big deal, right? And then look at the rest of the companies here. Lockheed Martin, Google, Boeing, NASA, Apple, Microsoft. You know who we don't see here? GM, Ford, Volkswagen, BYD, NIO, right? I mean, we don't see any of them. We see Tesla and we see SpaceX. This was another slide that, again, I found interesting because it's something I don't tend to put a lot of value in, and that's probably a shortcoming of mine, just because I don't know. I just think we're not quite there yet to really think of this as a meaningful place for revenue for Tesla, but it definitely could be. So what this slide talks about is Tesla's in-car console is like the early days of Apple's App Store. I can totally see that. Tesla's App Store likely coming with autonomy. Tesla will benefit from attention economy upside. Apple's App Store grossed more than $85 billion in 2021 based on a 30% commission rate. That's wild. That's huge numbers. Now, why don't I take it seriously right now in 2022? Well, because I think this will be, as it says here, meaningful once we actually have full autonomy, once we have robo-taxis out there. Once we have robo-taxis out there, that's when this could become a really big deal, right? Don't forget, Tesla's hiring, video game engineers, right? So they're doing something here, right? It almost seems like they're getting ready to build their own games, or they're just trying to find better ways to like integrate things like Steam and older video games for other I mean, there's a lot of cool things happening here. I wouldn't sleep on this. Be aware of it. I still think it's too early to factor into any models, but this is definitely yet another call option we have with Tesla. So there are many more slides I could have chosen from. There's 91 slides in this very well done, very efficient laid out presentation, this deck. Again, I'll leave the link down below. I highly recommend you check it out. Right? To me, this was very impactful. This is yet another company, another firm that is, kind of beating the drum, saying that this is real, this is going to happen. And again, the biggest takeaway I took from this, which what I thought was just crazy, was that they are also saying 10x by 2030 without including robotaxis or humanoids, right? So imagine if you throw that into the equation. What are we looking at? 14, 15, 20 trillion? I mean, all of a sudden, someone like Warren Relic isn't looking too crazy now, is he? So take a look at it. I hope you enjoy it. I hope you enjoyed this video. Do me a favor, hit the like button, hit the subscribe button, ring that bell. I love you all. Peace.